Plenty to unpack today, trying to make sense of the markets. We got the Middle East conflict, and we got earnings from some Canadian companies, including Capital Power, the electricity generator. Let's bring in Gavin Graham, Chief Investment Officer at Spire Wealth Management. Gavin, thanks very much indeed for joining us.
Thanks for having me, Andrew.
Start off with your thoughts on Iran. I mean, we've seen wars in the past. The stock market drops briefly, but often, nearly always resumes its upward course.
That's true. And I think all the studies that have come out since the Iran conflict effectively say that it's usually over as far as the effect on the markets is concerned within a few weeks, unless it actually turns into something much more serious. After all, here we are, Andrew, 4 years plus since the invasion of Ukraine, and the markets, after some initial uncertainty about things like gas supplies for Europe, have effectively, I won't say ignored it, but it's part of the background. And here with Iran, it looks as though we will see supplies of oil coming on, even if the Strait of Hormuz remains interdicted. You do have lots of oil at sea, as I think David Rosenberg was pointing out, and obviously things like liquefied natural gas. The US or Australia can increase production if Qatar can't get its products out. So it does look as though we've had that spike in oil, but as with Ukraine, it may well be that we will see that come back in time once it's clearer as to what the final outcome is.
What have you had time to? There's so much going on, but have you had time to pay any attention to South Korea? Apparently, panic spread through Seoul's financial district yesterday, and we've seen that market dropping almost 18% in 2 days. And part of it is just leverage bets. There was a national mania turning the stock market into South Korea's obsession, and it had pushed their Kospi index higher.
Absolutely. And leverage is never a good thing, Andy, as you know. It's when the market's going down. It's wonderful when it's going up, but when it goes the other way, it's very, very painful. You might actually make that point about other markets, including North America, where we've had those, one-day options, which effectively you're just betting on, is the market going to be higher at the end of the day, which is a complete coin flip. So Korea, you had both as you say, a sort of gambling mania, and a market that had done exceptionally well. I think it was one of the best performing, if not the best performing, emerging markets. So it's unsurprising that it's come to a screeching halt. But leverage is never a good thing, and you want to be very careful if you see things like very old-fashioned, but the margin balances, people borrowing to buy stock, going up on a steady basis.
There's a derisive name for these small speculators. They call them ants, apparently, and there were 14 million of them. And interestingly, people were unable to sell their stocks online, so they all rushed down to the brokerage office downtown and tried to do it the old-fashioned way.
Do they still have brokerage offices that are open? I mean, that's the amazing thing. Yeah. You try walking into an office and finding a real person. But again, it's liquidity. It's very, very important. And when you don't have it, is always at the worst time. You want to sell and you find that you can't. Which is what's been happening in the private credit market as well, actually, with various funds being gated because they are in assets that may not be the most liquid. And then when people want to start getting their money out, and more people than usual, they find they can't.
Yeah, and this weakness in private equity as well in the United States, as you say, casting a shadow over that aspect of the market. Give us some thoughts, if you would, on Capital Power, the power generator.
Well, it's a stock that's done really well. It's actually had a bit of a pullback in the last year because it was seen as an AI play. Here was the way to actually get exposure to the demands in power increasing. And in fact, I think Capital Power, when it came out with its results this morning, said there's a new data center contract in Alberta. As it is, you're still up 24%, although down somewhat from the highs towards the end of last year. It's added 2.2 billion gigawatts of capacity in the US. It's added an extra 10 years to its Michigan power contract. So all in all, Capital Powers are very well positioned to benefit from the increase in demand for electricity, raise the dividend again, which I think is about 15 years in a row. All in all, it's a stock that's pretty attractive and pays you a decent dividend as well.
You reckon that big energy companies, diversified energy companies, should be part of just about everybody's portfolio? And for example, you suggest Suncor or Canadian Natural?
Absolutely. And again, what's happened in Iran has reinforced the attractions of long life assets in a politically stable country with a relatively business-friendly administration. As it was, Suncor and CNQ were both making loads of money last year, and there you are, you're up 47% for Suncor. CNQ's up about the same amount again because they're able to produce oil at around, I think it's mid-20s US dollars a barrel. So even with oil under $60 a barrel, they were beg pardon, very, very profitable. Now with oil obviously over 80, they're making lots of money. But they've also been buying back stock, raising the dividend. They haven't been making dilutive acquisitions. So quite frankly, everybody, we're going to be using conventional oil and gas for quite a long while, and having long life assets in a politically stable country looks more and more attractive.
Thank Gavin. It's great talking to you, and thanks very much indeed.
Thank you, Andy.
Gavin Graham, Chief Investment Officer at Spire Wealth Management.